Good morning, everybody, and welcome to the National Real Estate Post. Here once again with our great friend Barry Habib out there in New Jersey. Before we get started, Barry, I got to mention Geneva. Geneva, these guys are fantastic. If anybody out there is looking to make a move, Geneva is kind of like that small hometown feeling, man. But they're kind of a big player, and that they pay great. They've got awesome pricing. So if you're looking to make a move, you might want to check out Geneva. Click the Geneva banner over on your right. Barry, let's dive right into today's show. Okay, you ready?
I am so ready.
Okay, so let me tell you, last year you made some big predictions, and you were pretty darn accurate. You said the Treasury bill, which was at 2.6 at this time last year, would get down to about 1.5. It actually got down to 1.6. I'd say that's pretty accurate.
That's on the 10-year Treasury note, yeah.
10-year T-bill, right. You said oil, which was looming in the $80 range back then, would get down to 40, and actually it went even lower than that. You said the stock market would remain pretty much flat, which it did. And then you said the Feds might hike rates one time, which in fact they did one time. You also said real estate was going to be booming and great, which it was. So with all that in mind, first of all, congratulations on your predictions. Those are fantastic.
We had a good year as far as forecasting.
You sure did, yeah, and you always do. So that brings us to this year. Here we are in January of 2016, and I'll open this up by saying, we did a story just the other day. The Royal Bank of Scotland basically came out and said, hey, everything's going to be bad, real bad, and there's going to be a cataclysmic, catastrophe in the world economy. Sell everything, go into safe bonds, don't invest in anything. And so with that as your floor to speak from here, so to say, what are your thoughts on 2016 for us guys over here in the U.S.?
Well, first I have to comment on your haircut because
Thank you.
It's very handsome. So
Thank you.
Now let's start off with that.
I just hope I handle myself okay.
The way you handle yourself is amazing.
That
So
was
now
great.
the Royal Bank of Scotland, they essentially said sell everything except high yield bonds, and they expected the stock market to drop by about 20%. Now in this year's set of predictions, we did expect a drop in the stock market as measured by the S&P of about 15%. I didn't expect it to drop down this much in the first half of January, but it has. So what does this mean for us, first of all, as far as the stock market goes? That Royal Bank of Scotland, they may be right on the money here. Here's the thing, it's a little scary, but we have now seen the stock market, what you call a correction, which means it drops by 10%. We've seen this happen twice in the last few months. That occurrence where you see two 10% corrections has happened in the last 100 years 4 previous times.
Wow.
When was it? 1929 before the crash. 2000, it happened twice, right before the crash, and 2008, right before the crash. I'm not saying this to scare anybody, and it's a small sampling period, but still, it does make you wake up and want to take notice. And maybe these are the types of things that the Royal Bank of Scotland's looking at. But there are other things to worry about in the stock market. The amount of revenues are flat. We see profits declining. The Fed's not there to bail us out, and the price to earning ratios are relatively high. There haven't been too many times when they've been higher than this. So it's certainly some warning signals. I am not, look, at the end of December, I sold most of my stock holdings. I've been on the sidelines because I am fearful that what we see here going on in the stock market could be a little dangerous.
That's good for bonds, though, right?
It typically is. You're 100% right, Frank, and that's one of the reasons why we've seen the bond market improve. And I do think this will be a good year for interest rates. Inflation's very low. We're actually importing deflation, as evidenced by this morning's numbers. Even when you talk about import prices declining, we're bringing deflation in. Our currency is getting stronger, other currencies weaker. That's good for keeping inflation low, which helps interest rates. It's not great for exporters, not great for the stock market, but this is a good thing typically for interest rates. So I think inflation stays low, interest rates stay low, but it's still going to be volatile on the interest rate side.
Okay.
And I think that there's going to be times refinance will be vulnerable. Purchases should be great.
Okay, so you think purchase market's going to be okay going into 2016 then?
Well, real estate's always local, but there's very low inventory. Only 1.75% of homes on the market for sale. That's extraordinarily low, matches some of the most historically low levels we've ever seen, and typically is a buy signal. Rents are going up at 4% a year. It seems to me that the demographics as well are very favorable for real estate. It doesn't guarantee it, but it seems that there's some good things in place. I'm looking for another good year in real estate. There are two things I'm worried about, two little kind of black swans that are out there. And one of them is if we do get this big drop in the stock market, it could reverse potentially the wealth effect and people could be a little bit more fearful about buying homes. So I am concerned about that. We don't want to see a prolonged or protracted big stock market decline. If we hit it and it's kind of shallow and it starts to bounce, that's okay. But we don't want to see a really deep decline, 40%, something like that. I don't think that'll happen, but that could hurt the stock market, the housing market, pardon me. The other one is, no one's really talking about this, but there's a company last month, Third Avenue Partners, that was a high yield hedge fund, and they kind of closed their doors to redemptions. Now, here's the thing, high yield funds, what they typically do is, it's not junk. They're typically taking on high dividend payers, like in the energy sector, oil and gas, or in the commodities, metal sector. They've struggled so much and they're losing so much money that some of those companies are not performing, they're not paying. So these funds are struggling and people are saying, hey, I want to get out of this fund. And now, to try and get those individuals who want to get out of the fund their money back, they're trying to sell some of these assets, but if they're not performing, you can't really sell them. So sometimes you have to sell good assets. It's kind of like what happened in the subprime crisis. And this is the contagion that could potentially spread. It hasn't happened yet, but you just wonder, is this the canary in the coal mine? So these are the two issues I'm looking at as potential black swans.
So you've got, basically, going into this year, a cautiously optimistic view, I would say, on the real estate market.
Yeah, I do. I don't think it's going to be a great year for stocks. I think it'll be a down year for stocks. I think that we'll see a good year for interest rates. I think it will be a good year for housing. We've got to go into this thing with our eyes open and watch these other things, because we've got to be nimble. If things change, we'll need to kind of take a look at our approach.
All right, that's awesome. Well, I guess we can circle back in a year and see how we fared on this one. But that's good information, and really appreciate you sharing it with everybody.
You bet, brother.
So everybody, do us a favor, put your comments down below. I know when Barry is on the show, we get a lot of good comments, and there's some interesting things that he brought up today that maybe you guys can hash out down below in the comments, and I think everybody would gain from that. Maybe, Barry, you could chime in at some of those comments if you see them.
I do. I try.
I know you do. Yeah.
Yeah. When you guys put some comments on there, if you've got questions for me, certainly I'll try and answer them to the best of my ability. Certainly nobody has all the answers, but these are things that concern me too, and we're all trying to look at this thing together going forward as a team.
All right. Well, one last thing, guys, before we sign off, don't forget you can check out Barry every day at MBS Highway. We have a link either above or below us somewhere here where you can check it out for free for a period of time to make sure that it does you well, which I know that it will. So with that, thanks to everybody. Leave us your comments down below. Forward, share, and subscribe. Barry, we'll catch you.
You didn't even mention my new headset.
The new headset.
Captain Video.
It's pretty cool. You're very high tech. You're like a millennial, is what you're like. Yeah, it's like a millennial. Yeah.
Thanks, brother.
I'll catch you later. See you guys later.
Bye-bye.